Interest rates are up, jobs are down, the Fed held their interest rate steady, and the war with Iran continues. But what does all this mean for the housing market coming out of July into August? Interest rates are now being inflated by three main factors. The war in Iran is keeping pressure on oil prices, which is putting pressure on inflation, which is putting pressure on the Fed not to reduce their rate, which is, of course, putting pressure on mortgage rates to stay elevated. August 28th to 29th, the Fed had another meeting where they decided for the fifth time in a row not to change rates at all. Interestingly enough, instead of a unanimous decision, there were three dissenters that voted to increase rates. Their concerns were over inflation and that the job market was not showing enough slowing and pausing in order to justify a rate decrease. Just a few days later, the jobs report came out at 100,000 jobs less than predicted. So we may see something different on the table for September. Almost immediately after hearing about these three dissenting votes, the bond market decided to move in their own favor and push up interest rates a little bit more. Now, again, we could see a change in September if the job loss continues, but that means that we would be betting on a financial slowdown for the economy, and that's not something any of us want to see. Elevated interest rates, inflation, and economic uncertainty is affecting buyers and sellers across the nation, and North Texas is no exception. But North Texas is staying relatively strong. Back in June, we had over 12,000 closed sales just here in North Texas. And July, we actually saw a decrease down to around 10,700 or so. So it's about a 1,500 home decrease. We are seeing a slowdown here, but that also means that buyers are going to have more leverage than they have before. Some of the strongest buyers markets come in high rate, high risk environments like this, where there is a lot of economic uncertainty. So because you don't have a lot of competition, your offer is going to go a lot further than it would if there were a lot more buyers at the table. One of the telltale signs of a buyer's market is when builders start offering more incentives, especially in the summer months. Normally, you will see builders offering large incentives and realtor bonuses towards the Christmas and January, February, when it's typically a lot slower. But summer and spring are typically the busier seasons in real estate where builders have more confidence. And right now, they just don't have it. Their overall builder sentiment is 40 out of 100, meaning most builders that are reporting on this do not have positive expectations for their sales going forward or positive reporting for their sales this last month. Especially when there's a lot of economic uncertainty, new construction can be one of the best bets for buyers. And right now it is, because these builders have deeper pockets than your average pre-owned home seller. So they can offer you bigger incentives towards your closing costs along with rate buy downs that would basically wipe out any equity built up by a pre-owned seller. But because these are national companies, they have more resources to pull from and more incentives to offer you. So North Texas buyers, if you are not negotiating at minimum to get your closing costs covered, along with some reduction in the sales price, then your agent is not doing it right. You need to be asking for these things and expecting that for the most part, unless the home is already well below market value, you have a very good chance of getting what you're asking for. Sellers, this means that you have to price right from day one. You have to keep your home very clean. Make sure that you have good professional photos and videos that are out there circulating. Make sure that your agent is doing everything they can to promote your home and that you're doing everything you can to make it enjoyable during showings and open houses. With all of that being said, buyers, make sure you're still being reasonable with your offers. If you're asking for more than 10% off of the listing price, you don't really have a lot of room to ask for a lot of concessions as well. Regardless of how desperate the sellers may seem, they probably don't have the equity to take $30,000 off their home price and give you another $15,000 to $20,000 in concessions. Sellers, you do not have to accept these low ball offers, but it might be in your favor to at least entertain them and do some back and forth. If you get an offer for $30,000 off of your asking price and $15,000 in concessions, you might want to come back at $10,000 off of your asking price and $5,000 concessions, or better yet, have your agent talk to their agent, find out what their real motivation is. Are they trying to get money off the price? Are they trying to get their closing costs covered? And work out a strategy that really benefits the buyer so that you don't end up losing a ton of money for no reason. And you also don't end up just saying no to a potential buyer who could have given you pretty much what you're looking for. Going forward, if we continue to remain in conflict with Iran, we will probably continue to see interest rates go up, not just stay elevated, but actually rise. And we could potentially see more of the Fed come around to the idea of a rate hike and potentially see Federal Reserve rate hike in September as well. This really would only be offset by one, the Iran war discontinuing and coming to a full resolution, or two, we see a big strain in the job market and start seeing a lot of financial hardship here in America. And then we would see the Fed lower their rates, which could potentially help ease mortgage rates. But again, those are more based around inflation and gas prices than anything else. So we really need to see this conflict come to an end before we see really big change in interest rates.